Left-hand side of the screen, your futures, that is, the market opens in the green this morning. Keith Fitz-Gerald with us again today. Look, Keith, it occurs to me, you've really got to be a very brave guy to call a bottom for this market and suggest to your clients you get out there and buy. You've got to be very brave to make a call like that. Is that your call?
Well, I wish I were that brave at the moment, Stuart, but I don't think we're quite there, but we're a lot closer than we were. And that's the key point. You know, investors talk about going bottom fishing, talk about doing rash things, but the key right now is to keep it on the fairway, do something simple, tread water, because one of these days it is going to go from terrible to less bad and then ultimately to good. And you got to be in the markets when that happens.
When is it going to happen? Tell me. We all want to know.
Well, I know, me too. Here's the thing, though. I think this is all about the Fed, and it's all about psychology right now. As long as the Fed remains out of control or is perceived to be out of control, the selling's not going to stop because rates are going to deleverage Wall Street. But this sell-off is getting tired in the teeth. I'm talking to professionals around the world. Their move is to begin to look for the upside now. So for all the selling that's happening, there are a lot of people out there buying, including big-name professionals. So I think, you know, again, my guts are telling me, I might be completely wrong, my guts are telling me you got to play to win, especially now.
I see on the left-hand side of the screen, big tech, all the big names up this Monday morning. Not a huge rally in any of them, but they're all up this morning. Is that where some of the buying is taking place?
Well, it is today, and that's, you know, that's a function of computers and leverage. You know, again, people say the narrative is that they're inflation sensitive, but that's not really right. Those are the companies that are highly leveraged with big funds because they can move them quickly in and out. So that to me is just reflex buying the computers. The real buying is taking place in the low beta, high dividend producers. Those are the companies that make stuff that you're going to want to have 5-10 years out.
Do you think there is going to be a really solid rebound at some point, or have I got something to worry about when I say the market's down and I worry that it stays down for a long period of time? Could you see that happening?
You know, I could see that happening, but I don't think it's very likely. So my job is this, and the nuance really here is probability versus possibility. Possibility is different, and what that is your emotions talking. You know, fear is a normal part of the human experience and the emotion. It's been programmed into us genetically over millions of years. If the saber-toothed tiger is out, you don't step out and go looking for dinner. So here's the thing, you know, stocks are the same way. We're driving based on what's called recency bias. We fear a fall, we feel that fear, we feel the angst. So it's tempting to just hunker down and say, put a sign on my rear end that says, kick me when it's over. But the real move, the real guts, the real thing you want to do, and history is very clear about this, is actually hold your nose, go swimming anyway, because that's how you're going to get the buy low, sell high that makes the markets work.
Okay. If somebody in our audience had $100,000 cash right now to put into the stock market today, what should that person buy?
Well, we got to make some assumptions here because not, you know, all investments are worth the risk, but they're not worth the investment. So this is the piece. If they've got big tech covered and they've got a 5 to 10 year horizon, I would say you need to move into stocks like Gilead, like Pfizer, like Chevron. Make stuff low beta, high dividend, consistent performers. The world is not going to turn without these stocks.
Okay, I hear you. And Keith, thanks for joining us. Best of luck with the analysis today. We'll see you later.
Thank you very much, Stuart.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.